really, I don't know if it was just a group of people or just one person, but someone somehow calculated out and figured out back from 1875 when all the market crashes were going to happen. Pretty darn close. What about the best time to buy a corner lot? You ever heard that? Like, you want a corner lot in the housing development? Maybe you get a little bit more property. Maybe it's just better feng shui. Y'all into feng shui? What is that? All I know is I spend hundreds of hours a week digesting information. And once I think I've got my thesis, that's when I branch out and look for other people's opinion. Once, if I see most of those agreeing with me, doesn't mean I'm right, not always. But most of the time, as long as I'm surrounded and listening to the right and correct people, maybe I'm in a good neighborhood. I think I'm in a pretty darn good neighborhood, at least for the people I try to listen to. Check this out, though. 1875, this is posted in a newspaper. What's going on? It's basically telling us in about a year-ish from now, there's going to be the bottom, the good time to buy corner lot houses, goods, etc. And then you hold till the boom reaches the year of good times, then to unload. When's that going to be? It's saying not until 2035 is not going to be the best time to sell. I'm cool with that. I could take that. Now, we're going to get another rally. Remember, the stock market always recovers faster than the economy. So just because the housing market and all that and businesses, I still think they've got a year or two for sure of bleed out where they're just going to keep bleeding, bro. Nothing going to look good. Stock market always front runs that. Why? Because the stock market's the one who's actually in charge. Just telling you what this chart's telling me. How about this? This looks exactly like my projection for the week, all right? Time for October. Did you buy the close yesterday? Gentle reminder of what October has to offer. Scott Rubner from Equity Clock. Since 1928, the best day to buy the market heading into Q4 was actually Friday, September 30th for us. Why? Because we had the quarter end for businesses, right? Padding the books and all that. Plus people have to unload. And plus the Fed is unloading this time too. So remember, quantitative tightening. That branches and trickles down to all the banks and all the big investor bros, right? Look at this. This basically sums it up. We're literally right here. All right. What do I think is going to happen next week or the following? Probably in about 1 to 3 weeks. Most likely next week, we're going to get a rally. I think it's going to be face ripper. I think it's going to be crazy, man. People are like, that was it. That was the bottom. That was it. I promise. Going into AMC, don't buy AMC, all right? But once you hear those bros saying they're multiplying or getting close to, when they're up 50% or 20% up again, revert back to this chart. This makes it simple, right? Sell at the peaks, not the valleys, right? So we were buying on Friday, buying bull. We could have another week of bleed out, but I think we're darn close to a big old rally because everything is just oversold on everything. It's just what all the indicators show. Hundreds of hours a week, everything's basically oversold. It's funny that the seasonality matches up with that. Now, these are also skewed or oddly weighted because of years like 2008, 2009, 2000, the dot-com thing. But for some reason, it still always lines up. Why fight it? It is what it is. Yes, times are different. But everything is still matching up. You know those like 2008 charts that you're seeing all over the internet where people are putting up 2008 versus now? And then 75% of the comments, people are like, this is ridiculous. Who would trust this? I will. Why? Because it's been right. Those 2008 to now, those charts, they're like 85 or 90, I think it's like 93% on track. You're going to bet against 93% out of 100 odds? Not me. I'm going with the flow. Now remember, last year and the year before, 2001, 2000, whenever we got a dip, you were buying it, right? This time, what are we doing? We shorten the rips. You know, we're actually flipping stuff. You know, it's more dangerous going bull in this environment because we are in a bear scenario here But if you want to play it safer, just short the rips. Especially the next one, I think that's going to be happening in the next couple of weeks. Same thing, seasonality midterm election. You can even put up something like this, like the second year a Democratic president gets in, guess what? It basically says rally up to the middle of October. We're going to rally up to the middle of October, and then we're going to get rugged. Going to get rugged, y'all. Somewhere after the first week or two of October. This is just like a presidential thing. And to win, so what? Right around November 1st is usually a pretty good time to buy it. That lines up with exactly what I'm projecting, and the smartest people I know, their charts and all that, they're all kind of are showing the same thing. Okay? So don't believe the rallies yet. Not yet. I don't think yet. Priciest bear market ever? What does that mean? Everyone's agreeing on this too. What is this showing? We're in a bear market. We're not cheap yet. This is like PE ratios, what companies are raking in versus what the stock price is and the, market cap, all that. We're only like halfway there for the stock prices, all right? We're sitting at 23. The median is 13 of where we need to be. Do we need to go another like 50% off, something like that? Overall macro, it could take a year or two to get there, but it's just saying we're not at the bottom yet. I don't think we're at the bottom yet. No one else does. Not extreme positioning. Hedge funds and mutual funds slashed exposure, but remain invested. Okay, so they're still not even extreme. Not extreme sentiment. We're actually not that low right now, comparatively speaking. This is Goldman Sachs, I believe. This is their indicator. Yeah, there's their Goldman Sachs, Mr. Warren Buffett indicator. We're sitting like at -1 here. This thing goes all the way to, -3. We're not even close. Macro, we're not close to the bottom. Short term, darn close. The systematic puke has one more week to go. And then, according to Goldman Sachs flow guru Scott Rubner, this guy's on it. He's the flow guru for Goldman Sachs. Do you think Warren Buffett hires the smartest guys in the world? Or do you think he hires the dumbest? More than likely, Goldman is right. The CTA crowd is running. They're kind of running the show. The CTA guys, they have to like buy and sell all the time, right? They've been losing their butts on what? The shorts, because they have to then sell stuff. They've been losing their butts on shorts. But listen, the CTA crowd is running a big short. $76 billion of global equity stocks. 21 billion of that is the S&P 500, 76 billion total. They are continuing to be sellers for the coming week. So what does that mean? They've got to be out of 76, they got to sell $76 billion of stonks in the next week-ish. But the big possible convexity trade is the upside over the coming month. His projections are next week, kind of down, kind of flat, kind of down, kind of flat. Okay? He's thinking kind of down, kind of flat, according to CTA. But remember, if it's kind of down, kind of flat, I've got a lot of proof that says CTAs are usually losing their booty on the times they're supposed to be kind of down, kind of flat, which is another reason why I'm thinking we might get the rally next week. It could take a week. So we're close to another rally. If we're flat or down next week, I'm going to be buying more bull stuff. Let's talk about that in here in a second. Number 2, 1 month flat tape, 31 billion to sell, but 134 billion to buy. So overall for this month, October, they got to buy $134 billion worth of stonks. Down tape, only 31 billion to sell though. Okay, so what does that mean? We're either going to be flat next week or down. And if we are, I'm buying a lot more bulls because the following couple weeks, they have to buy a ton. Now, unless the Fed finally comes in and actually does quantitative tightening in a big way, which I don't think they're ever going to do. I think it's just all BS. Why? Because that's what the numbers tell me. They're barely quantitative tightening anything. They ain't selling nothing, hardly. Unless they come in and dump like $1 trillion, that could kind of mess up this whole scenario and we could just flatline, okay? So what do? You use stops, okay? No matter what you're buying, we're talking about here, for sure in this market, use stops always. I don't care if you're 100% convinced something's going up, use a stop. Even if you got to make it kind of looser, 5%, 10% down, 15% down, 5 to 10% down, 3%. Use stops, okay? Cash on the sidelines. Bros with a lot of money have a lot of cash on the sidelines. It's not into stocks yet. Goldman's not 100% long into equities yet. What does that mean? They think it's still got to go down macro overall, and then they're going to really be buying the dip. The aristocrats have been talking about this one for a little bit. Now it's finally making headlines. So here's the thing. The yields, the treasury yields, you got a U.S. 2-year treasury yields. What does that mean? You can, get 4.2% on your money in a year, 2-year treasury yields. Well, but then you have the aristocrat stocks that people are like, yeah, but I just buy Coca-Cola. I don't know if Coca-Cola is. I don't even know if they pay a dividend because I don't pay attention to those. But stocks that pay dividends, most people just stay in those for forever. The old school buyers, they buy those. They're like, I get my dividend, so I'm good to go. Not if the average dividend you're getting is only at 1.8%. So the average dividend coming from a stock in the SPX is on 1.8%. If you found out that, wait a minute, I could take all my money out of SPY, Pepsi or a utility company or whatever it is, and put it on over into a 2-year treasury yield and do 4.2%, which is over 2x, 2.5x the return, would you do it? I would, if I played the market that way, but I don't. So what am I getting at here? This is more downside pressure, because once these people capitulate and pull out of their forever hold stocks and then jump into these 2-year yields and all that, something's going to break, y'all. Something's got to break. Something's got to break. SPY's going to go down. Because think about the billions of dollars in there, right? In our group, we actually are setting price alerts and all that. It's telling everybody to maybe make a financial decision on their own. Okay. It's really useful. So if you're working and all that, join the group and you can get those price alerts too. Here's my chart, and this is one of those charts, if I were to post on some chart bro site, they'd be like, look at this monkey. He has no idea what he's doing. I like keeping my charts crazy like this in the past because it makes me feel like I did something. This is proof that this is how I make money. I draw with crayons and little emojis, right? It looks crazy, but dude, this is how I make money. I do all this and I'm buying and selling on the rips and the valleys and blah, 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 blah. It's that easy for me. However, what you can focus on here is this blue line. This is basically what we think is going to happen. You want the exact price targets? We have some. I don't know them off the top of my head, but join the group. They're in there. Or, Bit Doctor is good on that. Or Eloquent Trades, watch his videos. But we're going to have a pretty darn big rally, and I'm going to be selling the bulls that we bought on Friday. Might take a week or two. And then what? Once I do that, I'm doing what I've always been doing, and then I'm going to trade that money, the bulls I sold, and turn it into what? Bears. Because them bears then are going to print me down back here. I am 98% sure that we are going to get lower lows than what we had last week. All right? And then what am I going to do down there? Probably the opposite of what I was just telling you, right? Zoomed in. Something like this. Yes, that's a Bitcoin there, Matt. Somewhere around this area, switching. How to make it the easiest way to play, the easiest, most profitable, easiest way to play right now. What button do I got to press to win? You said. I only got 20 minutes a day to invest in this. Jump out of the group, see what we're looking at macro, top, bottom, and do this. What? Get your finger on the trigger for TNA, Miss Beautiful Tina Turner. Tina. All right? You want to go bull? We're buying Tina Friday at the end because stuff got real low and cheap, right? Buying Tina. 3x bull of small cap stocks. They multiply like crazy. You can multiply like crazy just buying these and using stops. It's literally you buy at a low wick when everyone's freaking out, okay? Put a stop in, maybe 3 to 5% below. Wait till you're up 5 to 10 or 20% or whatever and scale out on the way, but follow your stop up. You know, there's no magical perfect number to pull profit at. But I think, you know, maybe every time you check it, if you're in more profit, move your stop up. You're now into more profit. You're now into more profit. Keep your stop about 5% below to protect your cash that you just made. And once you think we're getting to the top, you know, come ask people. You know, more heads are always better than one to ask. Are we getting close to the top? Kind of, okay, I'm going to start selling more. And now I'm going to be getting into what? Bears. How do you go bear? TZA. These two are all you need. Maybe forever, dude. This is probably the easiest play. If you want even more leverage, which is nuts because these are going like 2 to 10% a day. So when SPY goes like 1 or 2 or 3%, these are going like 3x that. More actually, because they're outperforming the SPXS and SPXL and the SQQQ and the TQQQ. These are actually going like maybe 30 to 75% more rips and drips compared to those. It's that easy. Trust in Tina. Trust in the girl Tina, y'all. Eloquent Trades dropped a crazy video, 2 crazy videos yesterday. I'm going to add a cherry on top and say, what if the DXY could fail along with what he's saying in his videos? Go watch these videos. They'll blow your mind. It kind of coincides like the first things we were talking about. Everything lines up. When everything seems to line up, it's a duck, right? It even smells like a duck. BitDoctor's videos, right? Remember, he's the YouTube guy, super smart. He's got a Love Shack. Have you joined his Love Shack? What is this Love Shack? First of all, whoever named this thought of Love Shack, I think, is beautiful. You guys like that name? BitDoctor's Love Shack? Come on, come on. What is this? You heard of Max Payne? Max Payne is based on options, right? So it's showing like how the market maker is going to try to cause the most amount of pain to retail and money flow overall, right? How are they going to do that? Come out with something called Max Payne. It's calculated. Well, all the things online, they used to be pretty darn close, but they haven't been in the past couple months. So I haven't really talked about it in a couple months. It's just been way off. Well, he figured out a better way to calculate it. In fact, he's got a live calculator of it all. And he even puts it out. He's got SPX, IWM, so that's going to be Tina and stuff, the small caps. SPX, SPY, you know. He gives out two different expirations, and he's showing us where they're at. Dude, they've been hitting darn close. Where Max Payne has been like, I don't even know, 5% off or 10% off, which is a lot. When you're trying to bet towards those, like monthly expirations and all that. His Love Shack indicator's been darn close, y'all. Take a look at it. Join his YouTube. Sometimes I think it's good to always go back to basics, and that's why I'm just talking about Tina Turner. Okay? If you're having trouble, just go back to basics. Focus on like 2 to 3 tickers. If that's it, you only need to look at 2 charts. SPY, VIX, maybe. Nah, probably not even VIX. Honestly, just DXY, the dollar, remember? If you don't know why, watch my past videos. I talk about DXY all the time. The dollar bills, y'all. Going back to basics. Robert Kiyosaki. Remember this guy? Back in the day, dude, y'all might have read his books or probably heard of it. Can anyone name a book that Mr. Kawasaki did? How about this? What if I showed you this and then you know? Does anyone know this? Cash flow quadrant, 4 ways to produce income. First of all, why am I showing you this? Because we are going into we call it a reset, a revamp, a change of pace for many. I think the economy overall, macro worldwide, is in for some crazy changes. Why am I telling you this? Because if you are an employee and you feel safe at your job, I don't care what you're doing, know that you could still get that letter, right? You could still have that meeting where they pull you in. And then there's these random 4 people that the company hired to basically tell you you're fired, you're laid off. Here's your severance package, whatever that is. Or you just show up to the building and the doors are locked and the sign's all grayed out and the lights are off. You don't know why? Just prepare for this now, as mentally, physically, and maybe following this flow. What's going on here? So, if you're an employee, you have a job. Time equals money. That's it. E. B, you're a business owner. You own a system. The only way to combat this really is right here. There's actually 2 ways, but just think about that one. Whatever you're doing at any job, I betcha you could do it on your own and create your own business right now. You don't know how? Great. Just start doing it. Action, y'all, okay? Make others make money for you. That's how you build wealth. You get income just flowing in. People are just collect checks, man. Collect checks, collect wires. You could get self-employed, but then it's just you making the money and then you don't have time to trade all day, which is the ultimate thing, right? Investor, you own the investments. Take your cash, do this. Remember, I made a video maybe a year ago, and I talked about, the easiest way to do it when economies are okay or thriving is become an employee, at a job where you can make enough money to save a bunch of money, and then what? You go down here, and then you take that money and you invest it, right? But on the same side, I was saying it's still good to just start dripping into something like this too. That way you can eventually have other people making you money, Protect yourself. Just think about this. So next week, what do we got? To wrap up, in the next couple of weeks, probably going to rally. What are we going to do? We're going to sell our bulls. We're going to get into some shorts. And then stuff's going to go back down. Just rinse, repeat, y'all. That's what the bear market is. It's macro going to keep going down, but it's always going to have those spikes to whoop everyone's butt that shorted it. When did most people short it? Even hedge funds, by the way. We showed this in our group. Hedge funds went crazy. Market makers went crazy the last hour on Friday. Why? Because the last hour on Friday, everything was dumping. We were like flash crashing. That's when even they were buying puts, like tens of millions of dollars of puts on stuff, betting it's going down. They're nuts. Did you know hedge funds still lost money last month? Are you kidding me? If you lost money last month, dude, join the group. How did you lose money last month? I don't know. Pay attention, invest in you, your future, and your family's future. Thanks for watching the video. Like, comment, and subscribe. It helps the channel. Just share it with your friends. Y'all take care.